Peter Eliades with you. This is Stock Market Cycles Update for the week ending Friday, May 6th, being recorded Saturday, May 7th. We live in interesting times. This is going to be a simulcast video for both our paying subscribers and for YouTube subscribers. We have not done a YouTube update for several weeks now. You've missed out on a lot. Our paid subscribers have received, I think they'll agree, they received some great projections, very short term, just over the past few days going into the Fed date. But anyway, what we're concerned about is where we go from here and now. I want to start out with a chart on the S&P 500 cash index, okay? Goes back to 2018 sometime. It's a daily chart, closing prices. And this is what we've constructed technically. This is the March of 20 bottom down here, closing price bottom. Again, this is a closing price chart. So we took what we considered the best representation of the upslope between the 20 bottom and the 22 high that we hit right at the beginning of the year. And this appears to us to be the best slope. It catches a whole bunch of lines in here. It almost catches this close here. And these closes try to get up to it and can't do it. So you can see they're losing momentum as they approach the peak. Then we take a parallel channel to that and begin it at the closing price in March of 2020. Okay, you can see what's happened. This is the channel. From the top of September 2nd through, I think, the second anchor. I'll tell you exactly when it was if you want to replicate the chart. The second anchor is May 7th of 21, okay? And then you just parallel it down to the close of March 23rd of 2020. And this is what you end up with. Now look what happened here. We came down close to it at the bottom in March. Didn't quite get down to it. Probably got down to it intraday, okay? But remember, this is a closing price chart. Had a big rally, came up to almost a double, triple top up here, and then another decline, which just in the past week or so has gone to a lower low. But look what it did. It broke below the lower part of the channel. It broke below it on it looks like April 26th. At the end of April, had a rally just above the line again, broke to a lower low, and that low close was on April 29th. Then another rally up towards the underside of the channel, couldn't get above it. And now, just on Friday, we went to a lower closing low, okay? So, this is obviously a bearish occurrence. It didn't break big time when it broke it for the first time. It broke it, went back, broke it, went back. And here we are with a close on Friday below this intermediate to longer term channel. What else do we have to look at? Well, there's two other things. Remember the speed resistance lines we talked about? Edson Gould, they were one of his favorite technical tools. And the more I work with them recently, I haven't worked with them for quite a while. Recently started to work with them again. And man, they're just wonderful technical tools. The way this one is constructed is you go to the low of March 20th. Again, you can do it on closing prices or intraday prices. You go to the low on March 20th, and that would be the beginning of the pattern. And then you go to the high, the closing high, on January 3rd, I believe it was. That's the end of the pattern. And you draw, in TradeStation, you draw a line from those 2 points, and it constructs what's called speed resistance lines. Okay, let me show you how they're constructed very quickly. You measure the distance from the closing low to the ultimate all-time high. You do that simply by bringing this line over, bringing a vertical line from the low up to the closing high. That measures the distance, and then you break it into thirds. This is 1/3 of the way up. This is 2/3 of the way up from the bottom, okay? So this is the 1/3 speed resistance line, which is drawn from the low through the 1/3 mark on the way up, okay? There's 1/3 up, there's 2/3 up. You go from the low through that mark for the 1/3, this low through the mark through the 2/3. Now, look at this. This is remarkable. That speed resistance line that doesn't know anything about this channel or whatever else is happening happens to overlay that thing almost perfectly. Look at this. They start to spread a little bit apart up here, but very, very closely. And the same thing has happened technically. You broke below the speed resistance line, got up to it, broke below, up to it, and now we've broken below again. So, what else do we have to look at in this pattern? Well, look at this. This is a bottoms line, okay? This begins with a closing low of October 4th of last year. And you go down to, I think you can use this, there's one or two anchors you could use for a second anchor. What I used was the second anchor on April 29th of 22. So it was this one right here, okay? So you draw a line between those two closes, and look what you do. You hit this close here, almost hit this close here, and Friday we came right down to that line almost perfectly. Let me zoom in on that and show you how close we were on Friday. Look at this. Teeny weeny bit below it, but almost right on that line on Friday. So, okay, Eliades, what are you trying to tell us? I'll tell you what I'm trying to tell you. I'm trying to tell you that if this line is broken on a closing basis, that we could see probably something dramatic happen to the downside. We might have expected something dramatic here to happen, but as it turns out, this line was ruling at the time, and it came down to that line. Now, you say, well, the line hadn't been drawn yet because you used this as an anchor. Well, you could use one of these two as an anchor too. This basic line had been formed right here. You came down to it and stopped, okay? So now this is critical territory here. Are we going to close lower than this close on Friday? Well, where do we turn to try and discover if there's a lower close in our immediate future? I'll show you exactly where we turn. Okay, closing price chart, S&P 500 cash index. On our daily projection chart with the shortest offset that we use, 1.75 to 2. You can see it right here, okay? And what does it show us? It shows us this downside projection to between 40.44 and 40.59 or 60 rounded off, okay? So this is telling us with a pretty high degree of statistical confidence that we're going to get a lower close. Now, it's not a much lower close, but mind you, all you're looking for in those patterns that we showed you was any kind of lower close that confirms the breaking of the pattern. Those types of patterns can lead to crash-like activity. I'm not telling you that's going to happen, and I'm not saying there's going to be a crash, but I'm saying that the breaking of the pattern could lead to crash-like activity. So if this projection is met, and it should be met quickly because it's a very short-term projection, then we see the possibility of crash-like activity for a couple of days next week. Now, that's the bad news. Good news for bears, bad news for the bulls. The good news for the bulls and the bad news for the bears is that there probably isn't much time left in this decline, okay? The reason I say that is because bearish sentiment on most of the popular sentiment indicators is very high. The put-call ratio is high. There are a lot of people out there that are bearish. So you say, well, then we should turn immediately from here. Not so fast, folks. Bearish opinion, even very high bearish opinion, does not turn markets. In fact, crash-like activity often happens when there is a very high level of bearishness because it happens quickly and it's over with and the tables turn real quickly. That's the type of thing that I'm expecting. So maybe a couple of days of crash-like decline early next week, and then we might be looking at some kind of bottom. The bottom? No, folks, not the bottom. You know what my call is for the long term in this market. We are so completely overvalued. Even now, 25% on the NASDAQ 100. This market is very historically overvalued. So no, not the bottom, but a bottom that could last for several weeks and maybe even a few months. That's a possibility, okay? What is the strong point of our cycle forecasting? Well, it's the price. So you say, well, if we're going to crash, Elides, what can we go down to? Our regular subscribers have been given numbers, but let's go over some of those numbers so you can get an idea of the possibilities. I'm not saying this is going to happen in the next couple of days, but if we do have crash-like activity, the downside potential is somewhat limited. I'm not talking about a 30-40% crash like we saw in 87 in a couple of days. No, I don't think there's the potential for that. The cycle projections do not tell us that. But 8, 10, 12, 15% in a few days, that possibility exists. Let's take a look at some numbers. Okay, here's the weekly projection chart for the S&P 500 Cash Index. And we have a projection. It was confirmed last week, a week ago, the week ending on April 29th. We came down a little bit lower on the midpoint for the bar this week. Where's the downside potential? Well, this we're being told. Now, mind you, this is a 39 to 40 week offset with a plus or minus 10. For those of you that have the software, a plus or minus 10% parameter, which we almost always use with weekly charts. So the lowest side to the downside is about 37.59, 37.60, okay? That's on an intraday basis, not a closing basis. How far down is that? That's almost 9% down. I think it's 8.8%. So that's pretty big potential to the downside, especially if it happens quickly. I'm not saying that's going to happen. I'm saying that with the sentiment picture we're looking at, that if we're going to get down here, it's probably not going to be a drip, 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 drip down here. It's probably going to be boom down here. And then you reach a bottom that can hold for several weeks, maybe even a few months. I think we're close to that time-wise, okay? So here's the potential to the downside on the S&P. What else should we look at? I like to look at this ETF. The symbol is XLK. It's a Select Technology ETF. Okay, the symbol again is XLK. And here's the weekly 39 to 40 week offset like we just showed you on the S&P. And look at this one. The downside projection is calling for 118.74 to 129.34. Let's take a look at the lower end here and see how far down that is percentage-wise. It's almost 16%, 15.5% down here. Now, again, this is the lower side of the projection. You can meet the projection by coming into the window at 129.34. But this is the potential to the downside. And I'm saying based on sentiment numbers and sentiment that we see happening in the market now, there's a good chance if we're going to get down there, that we get down there quickly. Okay. Let me show you one more thing. And this goes for those of you that may have the software, because I just thought of this because of the beauty of the software that Stefan Scheuermann from Germany put together. I never used monthly charts for projections before, but let me show you how they can be useful. I'm going to bring up the NDX with this same 39 to 40 week offset. Okay, the chart's kind of messy, but I just want you to get the general idea. As you can see, here's the all-time high in November of 2021. We broke below here for a couple of weeks and gave these big-time downside projections. 99.97 to 11.228, rounded off. And then we rallied, went above the offsets again, came down and gave a crossing right here. Well, this is always confusing when you do cycle projections if you get two crossings. So I said, I wonder what it looks like on the monthly chart. What do the crossings look like there? I was kind of betting in my mind that there were not two crossings, that there was only one. Well, let's take a look at that chart. And here's the chart. And indeed, this is a monthly chart of the NDX, the NASDAQ 100. You construct it the same way as you do a daily or a weekly. You take the middle of the bar each month, And look what happened. Last month, we broke below the offset for the first time. What am I using for offset? Well, you know what I did? I converted the 189 to 194 daily offsets that I used into monthly offsets that by using it. Well, it was an involved formula, but anyway, this is what I came up with. The short side of the offset would be 896. That's almost exactly 9 months. And the long side of it would be 9.2, just over 9 months long. So both of these are almost exactly 9 months moved forward, okay? And in so doing, as I said last month, we got this downside projection, which called for 10,935 and 11,994. It's calculated the same way that we normally do projections. You just take the crossing, the two crossings in this case, because they're very close together, but give slightly different readings. And they give these readings in the middle here, okay? And then you take plus or minus 10%. So on the NDX, 10,935 would be what? We're talking about almost 14%, okay? So that's the downside potential. Now, here's the important thing of perhaps this whole update, okay? And this is the good news for the bulls, those of you that want to be bullish out there. Once these projections are hit, and as I said, they could be hit, who knows, in a few days. Once these projections are hit, there are no other projections to get. Let me draw you a rectangle here to show you these projections. Okay, there's the rectangle for the projections. Let's go to the next longer offset. Okay, this is the equivalent of a 100 to 110 week offset. I'm not going to go through the mathematics with you because, again, I've never used these monthly offsets before, but they come in very conveniently because, as I showed you, you only have one crossing now, not a couple of crossings. Okay, so it does away with some of the confusion. I'm assuming it's going to be as accurate. So this is the maximum downside projection, okay? Here's the box right here. So let's say we get down to the bottom end of it. Well, you can get down to the bottom end of it in 1, 2, 3, 4, 5, 6. Then the next 6 or 7 weeks, you're not going to get a lower projection. So there are no lower projections to get. Let's look at this with the S&P. There's even a more dramatic difference with the S&P. I think this box represents, I don't remember when I drew it in, but I think this represents the maximum downside projection for the S&P from the weekly projection chart. And you can see, if we get down to the very lower end of this, you're talking about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 to 12 weeks before you can get to the lower part of this offset. So you just can't get lower projections. Does that mean it's impossible to go lower than the lower end of the box? No, folks, there's very, very little is impossible in the market. I'm just showing you via the technique that I use that this shows a virtual impossibility over the next couple of months of getting lower projections than the low end of this, which on the S&P is around the 3,800 level. Now, I guess what you could do is one of our infamous little loops. Come down here really quickly, get a loop rally back up, and then come back down around here and go through that little loop offset that was created and then get lower projections. Ultimately, I assume that's what's going to happen. The sooner it happens, the lower subsequent projections we can get, because as you can see, the offset moves up as the year goes on. Here's the end of the year right about here, okay? So if we have not crossed below these by the end of the year, that begins to limit the downside potential for this longer offset. This is 100 to 110 week equivalent offset for a nominal 4-year projection. Okay, that's it for the equity market. Let's take a look at a few other things. This is Bitcoin. I wanted to show you this technical pattern again. This is a monthly chart on Bitcoin. All I did was join the two highs, okay? And then brought a parallel down to the low in between them. Let's take a look at this on a weekly chart. I didn't do that. Okay, I'm looking at this for the first time on the weekly, but look, it's the same thing basically. It's a little messy. Let's temporarily get rid of these lines. Okay, that makes it a little clearer. So this is the high for the week ending April 16th of 21. This is the high for the week ending November 12th of 21. You bring that down and parallel it to this low, the week ending June 25th, and look what you have. Bingo, a hit. Bingo, a hit, and almost hit, and down to it very closely at the close on Friday, okay? So you can see how important this potential channel is on Bitcoin. It's formed this large channel over the last year and a half, almost 2 years now, and this is very important territory. Here's the projection on the weekly chart for a 20-week offset, nominal 40-week projection. What you saw before I brought this up was the incorrect offset, because that offset was not set for weekly charts. This one is, these offsets are for the weekly charts. This is a 20-week offset, and this is a projection for Bitcoin. This is a big time lower projection. 18,530 to 27,707 rounded off, okay? So are we going to get down there? Well, the indication is that we're going to break below this longer term channel that we see here. Let's take a look at a shorter term offset here and see if it shows us anything. Okay, here's a 5-week offset, nominal 10-week projection. Notice we just missed reaching the upside. Well, we now have a downside that starts, it's interesting where it starts, just below the lower part of the channel, 34,347, okay? That's a 5-week offset. Here's the 10-week offset, and it's showing even a little bit lower. Actually, the 10-week, no, you could get down to this. In fact, you did actually get just down to it almost exactly on the low last week right here. Look at this. Right at the top of the projection box, right at the bottom of the parallel channel. Looking just at this chart alone could give you the potential of this thing being bullish right here, okay? Let's look at the next offset. Okay, here's the one that throws the curse at Bitcoin. 20-week offset, nominal 40-week projection, and that's calling for significantly lower projections, okay? Not very good at all on the downside. The upsides are good, 75%, but the downsides, and remember, Bitcoin has been now, this goes back to January of 2019, and that's been basically an almost straight up uptrend for 2 of those, 2.5 perhaps of those 3 years. So this is not a projection that one can heavily rely upon, but just to let you know that it's out there, okay? We'll be following this, actually. We'll follow up on this for our subscribers, okay, on the Bitcoin. Now here's an ugly chart for you, okay? This is the 20-year ETF bond chart, and look at this projection. That was given here. I remember, I think you'll remember that for our paying subscribers, we gave you this projection right around here. It looked like it was crazy at the time to call for this kind of move in the bonds, and yet look where we are and how close we are to hitting it. In fact, that motivates me to go to the longest projection of all that we usually use, and that's the 200 to 220, which is like a 4-year offset, nominal 8-year projection. And look at this. That's actually been given. Wow. Again, I ask you not to rely on this for trading, money-making purposes unless you have some of your own work you do that goes along with what you're looking at here. Do not rely on this alone. But this is an incredible downside projection, which implies very, very much higher intermediate to longer term interest rates. Look at this move. Wow. Okay, that's enough excitement for one day or one afternoon, whatever. couple of days next week, because of the projections we showed you and because of the sentiment put together, could be very dramatic. And I'm thinking they could be dramatic on the downside. But again, remember, we're dealing with percentages and statistics here. So I would highly prefer you not use these strictly as implementation, or yes, implementation, but as relying on them solely for trading in the markets. And with that much having been said, I'm going to sign off. Stock Market Cycles, this is the weekend update for the week ending Friday, May 6th. It was recorded Saturday, May 7th. We're finishing the recording about 3:27 p.m. Pacific time. For our regular subscribers, we'll talk to you again on Monday. Thanks for watching.